A very good afternoon to you, Yvette. I've got Neil Barnard here in studio, but let me start off by saying that you're from Lusaka. You ended your visit on Friday, looking at a growth rate of about 8%. You've been on the ground. Does it look likely?
Yes, I think we remain fairly bullish on the outlook for growth in Zambia. So the government is indeed estimating that growth will reach 7.7%. We're marginally above that with our estimates of 7.8% in 2012. And this is being buoyed by quite an expansionary fiscal stance, with the government embarking on quite substantial public investment program, investing in road infrastructure as well as energy infrastructure, but also continued developments in the mining sector, whereby some of the large mining houses have expanded their mining operations, while new mining operations are set to come on stream in the short term. So those investments are driving growth quite considerably higher. We've also seen low levels of inflation that have supported household expenditure, and as well as fairly good performance of the agricultural sector and small-scale farmers being able to buoy their own income with those produce. So we remain fairly positive on the outlook for growth specifically in Zambia.
Hi Yvette, it's Neil here. I noticed you touched on the agricultural sector in Zambia. What we have noticed is that only 15% of the 60 million arable hectares are currently under cultivation. Does the government have any plans set in place to increase the productivity and efficiency of the land going forward?
Yes, they do. Agriculture is definitely one of the key sectors for the government, in line with their desire to increase employment and stimulate greater productivity in the agricultural sector. So about 90% of Zambia's land is actually under customary land, and to some extent that may have limited the extent to which commercial farmers have invested in Zambia thus far. The government has, however, identified vast areas of land for commercial farming, and has therefore classified this land as commercial farming blocks, one of which has been active for a number of years and has been positively affecting the amount of production from larger scale farms. There are about 8 other commercial farms or commercial farming blocks that have been identified by the government, and that will add about 800,000 hectare in land to the agricultural use in a fairly commercial and large-scale fashion. So they'll have a large commercial farm in each commercial block, and then that will be supported by smaller scale farmers throughout the land area. So 3 of those have been prioritized for short-term development, and that should allow for both foreign private sector investment as well as domestic investment in larger scale and more efficient forms of farming. As you say, there's only 31% of the overall agricultural land being currently used for commercial farming, and only 3% of that land is actually currently under irrigation, so about 100,000 hectares under irrigation at the moment. So there's great potential for increasing the amount of land under permanent crops, and again there's great potential for increasing the output of those agricultural land pieces through using machines, or increasing the use of machines, and also allowing for irrigation of those areas of land. I mean, 45% of Southern Africa's water mass is actually in Zambia, so there's great potential for the agricultural sector to continue to grow.
You touched a bit on infrastructure earlier, Yvette, look from the public sector as well as the private sector. What projects are currently underway right now?
So it's estimated that there is about $22 billion in projects, in viable projects that are at the cusp of either receiving a feasibility stage or a bankable stage. And those projects mainly pertain to road infrastructure, so that the greatest focus of the government has thus far been on the rehabilitation and expansion of the road network. They've just launched a Link 8000 program, which aims to link all of the provinces through expanded road networks and improving the road networks, which thus far have suffered from quite heavy utilization from the mining industry as copper is exported. Some of the energy infrastructure projects include the Lower Kafue Gorge, which is said to increase installed capacity in the production of energy by about 600 megawatts. And then the railway is also yet to receive quite a considerable boost. So there's an aim to link the mining operations in the new copper belt and the old copper belt with the railway, and then subsequently link that perhaps to the Lobito port in Angola. The Angolans have already extended their railway all the way to Benguela, and there's a plan to further extend it to the border of Zambia. And then on the other side, there's plans to increase the capacity that will link the copper belt to the Tazara land that line that leads it all the way to Dar es Salaam. So in all three of those sectors, there are quite considerable amount of projects that are being embarked on. And then on the private side, there are quite a number of commercial property developments that are actually taking place around the mining operation. So in Ndola, Solwezi, there are a number of malls that are being constructed there, as well as other office space units, as well as households, obviously, for the mining operations.
Yvette, I just want to move over to foreign perception on Zambia quickly. What we tend to see a lot is that there's a lot of interest in the stock market in Zambia, but there are certain inefficiencies associated with that market. What are you seeing in the broader economy, in the real economy, from a foreign perception point of view?
I think Zambia does stand out as obviously quite a remarkable and robust story with its current account surplus, its ever-growing mining sector, its overall healthy performance in terms of macroeconomic indicators. So it performs relatively well in contrast to in comparison to its peers on the African continent. So investors are definitely keen to gain exposure to this market. As you've mentioned, both in the equity market as well as the fixed income market, these markets are actually quite illiquid and small. So for example, there's only about $2 billion in outstanding fixed income instruments, while the market capitalization is 50% of GDP. The trading activity there is actually only less than 1% of the market capitalization, with a single share making up over half of the overall market capitalization. So the capital markets are small, illiquid, fragmented in the fixed income space, with plethora of bonds in very small issuance size, offering perhaps or in contrast to, for example, Kenya or Nigeria, these markets are a little bit more difficult to gain access to. So while there's great interest in Zambia, we're at this point in time not seeing significant portfolio inflows into Zambia. So what we're seeing is that it's mainly in the form of foreign direct investment into the projects I referred to earlier, and foreign direct investment by the mining houses who are expanding their presence in the copper belt. So, I think in terms of growing the capital markets, there's a desire to increase the number of listings on the equity market, and there's intention to streamline the fixed income market through restructuring the outstanding debt, perhaps swapping them into some of the benchmark bonds that have recently been introduced, to try and increase the liquidity and secondary market trading in those markets.
Well, thanks so much for joining us, Yvette Babb, Africa Research Strategist at Standard Bank. And a very big thank you to my guest host, Neil Barnard, from a sales trader at Securities Africa, who has been our guest host for this afternoon.